Welcome to Market Pulse by SCSecurities and Daily FT. Our effort is to bring you the expert insight for you to have a better pulse about the Sri Lankan equity markets. Foreign direct investments has been a challenging factor for Sri Lanka in the recent past. Our resource person today is an expert and known for sourcing large-scale investments and also the foreign direct investments into the country. We are privileged to have with us today Mr. Alex Lovell. Alex, welcome to Market Pulse.
Thanks, Dinusha. Nice to be here.
Alex, to start off the conversation, can I get your overview about the current situation of the equity market, first of all, the Colombo Stock Exchange?
So, Dinusha, I am basically not a great equities guy. I actually always am of the thought that one must acquire assets, build up assets, and you provide exit to your investors. And the stock market is probably the ideal way for us to do the exit. Yeah? But currently, the market has been doing exceptionally well for a number of reasons. But the only the factor is that we've not been able to attract a lot of foreign funds to invest in the country, and there are macroeconomic reasons as well as, of course, the stability of the exchange rate, etc., has always been a deterrent factor to them. So that's why you see these temporary outflows. But I think like the bee and honey story, when the markets get back to stability, the currency stabilizes, the macros stabilizes, they would always come back. And I think Sri Lanka is a great place to invest as well. Yeah.
So Alex, now if I may ask, in the January 2021, the all share price index has reached the all-time high, and that was like after about a decade. And also recently, few days back also, the market ASPI has reached another new all-time high level, and that was like few days back. And in your view, do you think this is sustainable? And also, if you are talking about an all-time high level, is it already overvalued, or what is your opinion on that? Is it too late to invest?
Let me put it this way, Dinusha. If you really look at the value of the market cap of the entire stock market is about $20 billion. And when you look at our GDP, we are probably between $70 and $80 billion. Okay, so generally, the market capitalization of the stock market is about 70% of your GDP, which is about 56 billion. So there's a lot of room to grow, but that growth will come, especially if you have the number of, now actually we have a very limited number of stocks that trade, and the movement also restricted to a few stocks. But I think if you could encourage family businesses and other corporates to increase the number of counters or list them on the stock exchange, you will see that we are achieving much greater heights than this.
Okay. And Alex, now compared to the Sri Lankan economy, the stock market is doing extremely well these days, despite the economic challenges we are facing. So what is the disparity?
The correlation, I sometimes I find it very difficult to find a reason for that. But the good news is that it's moving upwards. Yeah? And the volume of trade compared to what it was 2 years ago is substantially high. So it's an interesting situation. Part of the reasons is also it's always correlated to your interest rates. Now the interest rates have come down substantially. So most retail investors look at the stock market as a go-to place to get slightly enhanced returns. So that movement has partly taken place because of that. But I think gradually, if there's an interest rate hike, then it'll move back to the banking sector. When I say it'll come back to the the home where it left. Yeah, so it's that's the situation I think we are in right now. But so the interest rates is a great determining factor as to where the money is flying to.
So if I take your attention again to these interest rates that you touched upon correctly, now the interest rates has been controlled by the government also, and in your opinion, how far we can go like this, and what do you expect in the next monetary policy review? Like, is the interest rates should go up in your opinion? What should
It's
happen?
really a challenge to the monetary board. You see, we are also having a situation where the market has got hampered with COVID and other external factors which nobody has control in. So how do you stimulate the economy? So the interest rate is one of the determining factors there. So I don't like to predict, but I think the monetary board is going to be left with a huge challenge as to where they're going to place the interest rates at.
So whatever the reason may be, we are seeing a lot of local investor interest towards the capital markets. But as you correctly touched upon at the beginning, the foreign investors has been the net sellers in the recent rally. And is this going to continue for the future as well, or also can we sustain without the foreign investments from the Colombo Stock Exchange?
Yeah, that's exactly what I said. Was what happens is today the base, you see, the funds and high net worth individuals are very sophisticated investors. For them, there are a number of reasons why they would want to invest here. Whether there is stability in exchange rate, whether the growth of the economy, the growth of the particular target company that they have invested in. So all those factors come in. But when there is a slight turbulence in one of these things, they tend to run away. Yeah, quite rightly so, because it's their money. They want to protect it. They want to create real value. They are not. So as a result, what happens is that when the situation is not very conducive, they tend to fly away. And I think when the things settle, then they always come back. Okay, but in the meantime, to answer your previous question, whether this market, what I call a run, is sustainable, is something that it's very hard to predict.
Without the foreign investments, is that a challenge? It's
going to be hard. It's going to be very challenging as well.
Okay.
That has always been, if you take the history, the foreign funds, the established funds coming in here has always been a catalyst for market to grow. But in the absence of that, it might be very challenging.
And also at the same time, Alex, now we have seen in the recent year, especially this year, we have seen some new IPOs coming into the market. That is also after a long time of break.
Yes.
And there are very good companies coming into the listing. And in the pipeline also we have seen there's a lot of companies still about to come on board. And how do you see this development? How encouraging this is, and what can we expect?
For some of these local companies which are listing, as long as they have fundamentals, revenue growth, profit growth, and if they see that particular segment growing, there will be always demand for such stocks. The other thing is, Dinusha, is that the pension funds and the ETFs also, in order to manage to grow the money in real value, they also have to have certain asset allocations to go into these markets. But I don't think they have played like the insurance companies, for example. But I think time will come where, when the situation stabilizes, some of these long-term investors will come into play, and I see not in the shorter term, but in the medium term, there would be a number of companies which will come onto the market, and they will be, if you place it quite attractively. You see, one of the things about listing a company on the stock exchange is that there must be a story to tell. What have we done in the past? What are we going to do in the medium term? What are we going to achieve in the long term? how are we going to protect the shareholders' interest? Do we have proper governance structures? So if you come out with a listing which covers all this and gives the investors the confidence, then I'm definitely there'll be stability in the market. And I think we should attract quality investments as well. I think when you really look at the stock exchange as such, the CSE and the Securities and Exchange Commission, we have actually, in terms of governance, etc., we have come a long way, and we are continuing to evolve. But unfortunately, the current situation has not been conducive for us to grow further. The macros are not right, etc. But I think over the medium term, these things should settle down. But it's a tough road ahead. It's a tough road ahead.
So, what is your advice for these new companies coming on board? How can they attract the institutional investors and also probably foreign investors? How can they pitch themselves, and what do they expect? What should be their way forward to attract the investments?
To attract foreign investment today, Dinusha, is going to be, as I mentioned, is going to be extremely challenging. When I say challenging, it's extremely. We might not have the right, what do I call, environment to do so. Yeah. But on the other hand, if you are a company which has dollar-based investments, a dollar-based revenue, dollar-based, I pick Expo Lanka as a classic example. It has had a tremendous growth, partly because of the kind of revenue that they create is mainly foreign currency based revenue. So likewise, there are lots of companies locally who have dollar based earnings should seriously consider coming to the market. This will attract the foreign investors because the value of these companies are really maintained. If not, what happens is now, like for example, when I invested in Sri Lanka in 2007, before the war, the exchange rate was 107, 108 to the dollar. Today, the same investment is worth half that value. Today we are at 200. Okay, so but I've been a long-term investor, and I will continue to be a long-term investor in this country. So this is something that I have to accept the fact that, look here, my investment is not going to grow as much, but there are practical issues. But I invest for a different reasons. You know, I'm sort of emotional. This is where I was born. This I was educated. This is I need to give something back, and I will continue to do what I do. But it might not be the same thing with a different individual. He might just want the real value of your investment maintained. He wants growth. He wants profitability. He wants distribution. Some of them don't like retention of money within the business. They want to be given as dividends, etc. So these are the other side of the coin. So it depends on what kind of investors that we attract. But I must tell you that there are not many emotional investors in this world. They are mainly for real return. They always look for real return.
So when we talk about the real return, and when we connect it to the economy of the country at the moment, what is your outlook about the current economic conditions of Sri Lanka?
Dinusha, it's a challenge. Okay, so this is my personal opinion. I have no affiliation to anybody. It's just that it's my personal opinion. Is that, you see, for this situation to be in this situation is just that the wound that started festering a long time ago. Okay, so what happened was we did not address issues whenever these things occurred. We never addressed issues. Now we are having a issue where it's extremely challenging. It's like a wound that you neglect, and suddenly it becomes cancerous, and then you need to put chemotherapy. You have to do so many other things to cure the ills. So I see personally a slight hard road ahead. Yeah, it's not impossible to rectify this. It is possible, but it needs a lot of discipline, it needs a lot of courage, and it needs a lot of thinking, so to speak. So if you really ask me, it's going to be a tough 2 to 3 years ahead, but it could be it could be done. It's not impossible not to, because so many countries, if you really take some of the smaller countries, Malaysia has gone through these problems, and Singapore has gone through these problems, but they've all gone through difficult times to gain prosperity. But one of the problems we've had is that our earnings, because we are an oil dependent country. Malaysia has its own oil, okay. Indonesia has its own oil. So many others. And actually, Singapore is the biggest trader of oil, right? So, for us, some of these factors has not helped for us to be advanced. But at the same time, as I told you a little while ago, we also must realize that we are not the epicenter of the world for investments. There are so many countries around us, Bangladesh, Malaysia. All these countries are also trying to attract India, Pakistan, always trying to attract FDIs into their country. Within that, we are also in the same race to attract the same dollar. Yeah, but so from that point of view, we've always been challenged to attract that particular dollar coming into our country. So we must make it more conducive. But to answer one of your first questions, what would you do to rectify this situation, is that we have a lot of strengths. Tourism is one of our strengths. And also the infrastructure that we have, I always quote this to all my foreign business partners to say that if you take Mattala and if you take the port, Hambantota port, it's very rarely you find such a mass of land with shipping facilities and airline facilities. So we would be an ideal location for third-party logistics operation, big third-party logistics operation. So I think we should all work towards that, to attract that kind of big investments to come. One such large investment would solve a lot of our employment issues and foreign exchange issues, etc.
So in that sense, what is the role of institutions such as Board of Investments and also the government and also the companies, and what is our role, and from each of these parties, what should they do to attract these investments?
This started off in 1977, I think. We were called the Greater Colombo Economic Commission at that time, and it evolved into BOI, okay. But now BOI has evolved, and I think they've reasonably done a good job in attracting investments. But then we got to do more. So as I told you that to attract that extra dollar is always difficult, because there are competing countries like Thailand with far better infrastructure facilities, Malaysia, Indonesia. They're all attracting the same kind of the dollar investment in the country. But one of the biggest challenges we have, Dinusha, is the rating that we have. And I cannot, I must emphasize this in the sense, now like for example, most of the big companies, because we have to attract reasonably established companies to come and invest. That's how you will have a long-term growth, etc. Right? So what we really need is someone would always look at our rating. So we are at a CCC plus. Okay, so it's basically it's not a satisfactory place to be in, right? But then when that happens, most investors will say, sorry, we would like to go to a place where it's investment grade, which is BBB plus, etc. Okay. So as a result, we would lose out on a lot of good investors who would, established investors who would come into this country. So that's one challenge. But in terms of rating, I also must tell you that we have to come out and tell the world as to, look here, we have a triple C rating and these are the practical issues that we have had. But we are working on this aspect and we have a 3-year strategy or 4-year strategy. And we would be here, say 4 years from today or 3 years from today, our expectation is to be at this level. So no one has actually come and articulated that. And you need to articulate that to the investor public. Okay. They are interested to know, are you going to be in this status? In this case, I'm not interested to invest. It applies to equity markets as well as for FDIs as well. So therefore, we have to come out of that status and show a roadmap. Once the roadmap is shown, the investors will say, okay, they are trying. And then you must have continuous dialogue with the rating agencies. So that, look here, these are the issues that you have addressed. And this is what we are doing. This is what we like to do. And this is what we will continue to do. And, you know, keep that dialogue going. And then you will end up somewhere. And I personally like to quote one clear example is when I invested in Union Bank. We were downgraded from, I think, from a triple B status to B plus status. So it brought in a lot of challenges. Say, for example, none of the insurance companies would deposit with us. So whoever who put money with us, we had to borrow at very expensive interest rates. So that ate into your profitability. So you have shareholder demands to say that I want more profit. Here your cost of funding is up. So you are attracting marginal clients as your borrowers. So we had a whole heap of challenges to get over it. But what we did was we made a concerted effort to work on it. Now today, we're happy to say that we are at triple B plus, and very likely we will move up to A minus or A plus. Okay, so that's the effort that you have to put into very diligently to get to where you are. Address every issue, because generally when you get a rating downgrade or a rating upgrade, they tell you the reason why, and the reports are very, very detailed. So you've got to sit on each one of these aspects and address them. And most important thing is you must come and articulate to the investor public to say that, okay, this is what we are going to do. This is how we are going to fix the deficit. This is how we are going to address the macroeconomics situation. This is what you're going to do, the microeconomic situation, etc. So, and people are willing to listen.
You're an expert in banking sector, Alex. So, what is your view about the banking sector, banking industry of Sri Lanka at the moment? And it is in the stock market. It's at the moment mostly undervalued. Stocks are the banks. So, what is your view on that? What is the way forward?
I actually came into banking. I'm an investment banker by profession. I like mergers and acquisitions. That's been my what do I call my DNA. That's what I love to do. Okay, Dinesh, I must also tell you, when I was a young boy, my mother used to tell me, if you want to invest in some country or wherever you go and make sure that you buy into a bank first. Then you know exactly what is happening in the rest of the world. Okay, so when I could afford to invest in a bank, this is exactly what I did. I went and bought into Union Bank, and I had a great knowledge of what was really happening in the marketplace. Okay, where are the interest rates going to be? Where are the sectors where people are investing? Where is the loan funding going to which segments? So that was a great eye opener. But so with the Union Bank, of course, I think I've had a really, really happy journey, because when we started off, we were near distressed state, but now today it'll be I presume that, in my opinion, is one of the most cleanest, and it's a well-run bank, right? To talk about the banking sector, I must also tell you, Dinusha, in Sri Lanka, the banking sector is one of the most safest. Over the years, actually last 20 years, there's been so much effort put in by the central bank to manage the banking sectors, or they are governed quite well. You got to send reports, you got to meet them regularly, they have their audits. So it's basically well governed. So it's one of the most stable part of the economy is the banking sector. One of the biggest problems, the thing is the non-banking sector, the non-banking financial institutions. Today, if you see, at one time, I think 10 years ago, we had nearly 76 non-banking finance companies which were in existence. And they all ran into trouble. And today, if you really see, the reasonable ones are about 20 or 22 of them. Even that, I think, they are trying to reduce the numbers. They are encouraging consolidation, etc. So the non-banking institutional side needs a fair amount of ramp up. But the banking sector has been resilient. It has shown that it is able to take the stresses. This particular pandemic that we are having is a challenge to the banking institutions. They've come out of it quite well. Their profitability, but the problem is that the price to book value, so to speak, is all at 70% or so of their net assets value. So there's a huge upside which will come. But I think once the government efforts are all put into to restore to where we were, I presume the banking sector will stabilize and grow from here. It's been the cornerstone of our development, so to speak.
In contrast, some investors are skeptical that the NPL situation, how it is going to affect, will that be a challenge to the banks in the long run? What is your view on that?
You see, one of the things is that it is true, it's extremely challenging, especially if you have lent money to the hospitality sector. Okay, the exposure is big and the investment is big, but then what will happen is hopefully once the tourism starts flowing again, it will probably take another 1.5 to 2 years to stabilize, and it should come back, because one must understand that this pandemic also has brought in a lot of some side benefits. Now, like for example, if you take the European and the American countries, the pent-up demand has gone up. People are staying at home, they are not spending. And if you take some of the online stores like Guild and a few others, their sales are soaring because people have nothing to do but go on to the online and do some shopping. And yesterday, the footfalls to in-store markets in Europe has gone up now. So that means people have money, they have not spent during these last 18 months, so they want to buy luxury goods, and they will also, with the travel restrictions being eased up, they will also travel. Okay, so we have a fantastic destination to come to, so that will pick up. But it won't happen like, I cannot say that people are waiting with their suitcases packed to say open up and I want to travel. It will first attract the commercial travelers who have left businesses, unattended businesses, etc. to come. That will be the first segment that will come up, and then of course the normal non-commercial tourism sector will grow.
If I take your attention to the Port City project, now it has become the landmark project in the recent past, and how Port City project will impact the economy, and also how will we attract investments through this project? What is your view on that?
You see, if you take Port City project, okay, it has to be compartmentalized into different segments. One has to be the entertainment centers, the other has to be the financial services center. The other one is that you will find that there are quite a lot of multinationals were based out of Hong Kong, quite a number. And with the situation in Hong Kong, most of them are now looking for homes to go to. okay, because they want to relocate their head offices to various parts of the world, and quite a lot of them have been attracted by Singapore. Singapore has given them. But we have a much better infrastructure to offer these multinationals because we have a greater country, in a sense, people can travel up country, people can go to the coast, people can go to the wildlife. We have much more to offer than what Singapore does, right? So I personally feel Port City also should look at relocating some of these big multinationals to be relocated here in the Port City, and offer them sufficient tax concessions and offer them substantial what do I call incentives, so to speak, for them to relocate to. And the multiplier effect, if it's properly structured on Port City, is going to be very big, provided it is structured and explained properly.
So the project will bring into the country itself that in other industries as well.
Say, for example, if you have a multinational who's Asian-based multinational who want to relocate there, they don't just come with the CEO and the family. It'll be the CEOs, the CFOs, the regional heads, the regional marketing guys. They all come here, which means they need accommodation, right? So the real estate sector will grow, and then they would need transportation, and they are not going to stay here for the weekend. They are going to go out into the so the multiplier effect that will come out of the Port City is going to be humongous. And also every multinational today are looking to be located in a place where there's going to be substantial tax savings for their revenue. So that's something that we should seriously look at. How are we going to offer them that taxation savings? Ireland did it very well. People like Apple, people like Microsoft, people like Amazon.com, they were all based out of Ireland, where they used that as a conduit to do massive tax savings. So this is something that we should offer them. Yeah. But I know there are a number of companies in Hong Kong have decided to move out of Hong Kong. So I think this is an ideal opportunity to offer them and bring them over. It's not about buildings. It has to be about the details, the nitty-gritty of details that you are willing to offer these investors. See, so that needs to be undertaken. But the multiplier effect is humongous. I would say now look at Dubai. They have the healthcare city. They have a DIFC, the financial city. They have the Jebel Ali, the production city. Such a small country, it's able to create that amount of impact. And then for us, we are also located in such a fantastic location, even for the east-west flights to come and accumulate and give people like Dubai, to give them multiple choices to do various things. It's something that we should do it in a very organized manner.
And Alex, the Colombo Stock Exchange also, it's no more only equity exchange. Now they're introducing various products. REITs is one, and recently repo, a secondary market for the repos, and also gold currency options. So these are also on the cards. Yes. So how important for the stock exchange to have these different products?
You see, these are the stock market itself. Initially, what people know the stock market is to be basically equities. Okay. Now, like for example, if you take the Malaysian stock market, there is more debt than it started off as an equity market, and today there's more debt than equity there, right? So, like the gold exchange or the commodity exchange and REITs, etc. These are products that will have to evolve, and we have to have that. We have to be there with a multifaceted offering to the investors. Also, if you just take REIT as an example, okay, although it has been announced, etc., there are lots of additional work that needs to be done on the taxation aspects, the stamp duty aspects. All those things have to be cleaned out, whether it ties in with the current taxation laws. All those things needs to be addressed. You see. But then you must also understand, Dinisha, is that Sri Lankan people love real estate. They like to hoard real estate. Where you think that you are going to give it away to somebody else, they don't like it very much. So the mindset also will have to change. Yeah. So it's a complete transformation, but you can't do the transformation over a short period of time. So I think we are in the right path, bringing it gradually and people get to know. And for that matter, I've had a couple of solicitors, commercial solicitors, have called me up and had discussions on this. How do we do this? How can we do this? So that means the interest is growing, but it will take some time before it really settles down. Yeah.
And also, what about the systems and procedures that Colombo Stock Exchange is working on, the DVP, delivery versus payments, and there are various other changes they're making to be in line with international standards.
Absolutely.
So how will it be important, and will that attract future
Absolutely.
foreign investors as well?
Absolutely. You see, when you, as a foreign investor, when you invest, it must have a safe passage in and a safe passage out. And once the transaction is done, it must have an easy, smooth repatriation of currency or acceptance of currency. We have set up the basic mechanism, but I think as we go by with all these changes, it will facilitate a much quicker process, so to speak. It's good to do it now because these are hard times. Better introduce all these systems right now than look for when it's everything is prosperous and all those things, then you don't have time to address these nitty-gritty issues, you see. In terms of timing, I think that's perfect.
Okay. So in your opinion, what does future holds for Sri Lankan equity market?
Well, it's a hard one. You see, every market, every country goes through this, what do I call, a little bit of hibernation. The macros are not, whatever the reason it may be. You have issues, you have repositioning. So I think we have to take this, as a short-term hiccup, work on it diligently. I must tell you, it's not going to be an easy road. We have to look at options, hardcore options. It might, you have to create that need of the politicians versus the needs of the investors. So you have to create that kind of balance. If you really take the hard road, then it might not be politically acceptable, right? So you got to take that balance and say, this is what we are going to do, but we want to get here. But that roadmap, I understand the governor has spoken, I think in this interview with Bloomberg, he said that he's going to come up with a roadmap. Rather than look at the equity markets alone, we've got to look at the country as a whole. Okay, when the country's issues are fixed up, then the rest of the matters just fall into train. The next 2-3 years is going to be a real hard road to rectify things. We just need to put that in order. Once you put that in order, I presume the next thing would be that you can see the end results, the green shoots coming up, and then from there onwards, it's a question of how you nurture the rest of the things. So I personally feel that there's a lot of things that needs to be done from an economic point of view. Once you do that, once you fix that, you will also find that your equity markets will follow suit, and then you see the investors coming in. Then the whole multiplier effect, goes into action. But I must say that it's just a hard road, and we must be prepared for it, because for the sake of the country, for this, for the sake of the future generation, we need to take that we got to come to terms with the fact that it's going to be a hard road. It's nobody else's fault. It's just that the fault line has been created long time ago, and then now we are actually at the tail end of it. So you need to fix the cracks. So that's where we are.
To conclude, what would be your advice to the investors of the Colombo Stock Exchange? How can they go forward? What's the best way for them?
I personally think the investors must take a long-term view, clearly understand what they want to do, in the sense that whether they want to be just enter, make profit and profit takers, or whether you want to be on a sustainable long-term basis. As I mentioned to you, we have so much to grow as to the GDP value versus the current market cap of the stock exchange. There is a lot of room to grow, and I think best thing is to stick to it. So then with the macros changing, as I told you, with the growth that they are expecting to have, I think 3 to 5 years we should see ourselves in much more green area than where we are right now.
Thank you very much, Alex, for being with us today.
It's a pleasure. Thank you very much.
Thank you so much for sharing your expertise with us and taking time off your busy schedule. Thank you very much.
Thanks.
And thank you very much for watching Market Pulse, and we will meet you soon again with another exciting discussion.